Everyone is just reading the headlines. Germany is selling Bitcoin. Mt. Gox is distributing Bitcoin that gets sold off. But let's actually look at this objectively. Let's have a look at the data. Let's look at on-chain. What are the balances of the German government, of Mt. Gox, etc. Let's see how much impact this really has. Let's start off with the Bitcoin held by Germany, or by the BKA, the Bundeskriminalamt. So that is Bitcoin that had been confiscated. The balance was roughly 50,000 Bitcoin, and then the selling started happening on the 18th of June. We are now at 27,000 Bitcoin, so roughly half of the Bitcoin had been sold. But there's not only the German government that has Bitcoin, right? The US actually has way more. Have a look at this. This is the holdings by the US government. That's currently at 164,000. So that's more than 3 times of what Germany had even before the selling. There tends to be some offloading over time as well, but it's very hard to predict when the next sale will happen. We've also got the UK government. They are currently holding 61,000 Bitcoin. So when we plot this all together on a single chart, this is how that looks like. When we zoom out and we look at this over the span of 2.5 years or so, we actually saw a slight increase. But of course, currently the trend is rather negative. So in the peak, the governments of this world held 350,000 Bitcoin. Now they're holding 280,000 Bitcoin. Let's have a look at how this relates to, for example, the Bitcoin ETF holdings, right? Everybody says that the price of Bitcoin has to go up because there's now the Bitcoin ETF. How much Bitcoin is actually held there? The answer is 250,000 roughly. So the governments of this world currently hold a bit more than all of the ETFs combined. This, by the way, also includes Grayscale. In terms of total supply, it's 4.4% in all of the Bitcoin ETFs and maybe 5% or so by those 3 governments, right? US, UK and Germany. Let's have a look at the delta from the peak. So that's roughly 70,000 Bitcoin that got sold off. And that's since the end of March of this year. Since the end of this March, the number of Bitcoin that went into the ETFs is roughly 35,000. So the government selling was roughly double the size of the ETF purchasing during that time period since end of March of this year. Let's have a look at the price development since end of March of this year. Bitcoin since then went down by roughly 20%. Now 35,000 Bitcoin cannot explain a price drop of 20% because that's less than 0.2% of the current circulating supply. Now there's one potentially relevant effect that I haven't yet talked about, and that's Mt. Gox. Right? There was the hack of Mt. Gox. Mt. Gox totally collapsed. There were still some Bitcoin left. Those remaining Bitcoin now get distributed to those early creditors. How much impact does this have on demand versus supply? The Bitcoin balance of Mt. Gox went from 141,000 to 94,000. So that's a bit under 50,000 Bitcoin. Let's assume that all of those Bitcoin got already sold, which is of course very unlikely, but let's simply just work with the worst assumption. That gives us a total supply hitting the market of roughly 0.4%. So that's now the net effect of all the governments plus ETF plus Mt. Gox, 0.4%. Again, I do not believe that 0.4% of all of Bitcoin create such a crash. But of course, the FUD around those news can create that crash, right? If enough people read those kind of headlines, then people might sell. And this, of course, can spiral into a sell-off like we are seeing. I believe the relevant metrics are actually not in the headlines. I believe what's more important is what are the long-term holders doing? What is retail in aggregate doing? Is retail buying into crypto? Are they still depositing fiat? What is the average cost basis of the market? Those kinds of metrics, I believe, matter. Let's have a look at them. Here's the Bitcoin realized price. And this is the average price that the market has paid for Bitcoin. The current price is simply just the recent price, right? But the realized price is the average price. In other words, right now, people are almost 2x in profit. The average price people have paid for Bitcoin is 30.8K. And it appears that Bitcoin is hovering around that realized price historically. The realized price tends to go mainly sideways or upwards. It doesn't really go down much. So this is pretty much a lower floor. At what level Bitcoin becomes very cheap to buy Currently, again, there is quite a bit of room to further fall. I also like the market value to realized value z-score. So this again looks at the realized value or realized price, and it puts the current volatility and the current profit relative to the realized price in relation to the ups and downs of the market. And it shows us very nicely cycle peaks. It obviously also shows us nice bottoms whenever the price is below the realized price. And it seems like we have peaked out at similar levels to June of 2019, when we were at roughly 11K or so in the Bitcoin price, right? We are peaking here in the market value to realized value in a similar manner. And subsequently, we saw rather bearish momentum, and then in the end even the corona crash that accelerated that bearish momentum. Maybe we revisit this again, right? I don't have a crystal ball, I'm simply just presenting some numbers. I was pretty lucky to sell very, very close to the all-time high, one day after the all-time high. And the reason why I sold was because other long-term holders sold as well. So that's here in this metric, the value days destroyed multiple. That peaked at the all-time high yet again, and so I exited as well. I took advantage of those large prices. And so that's the problem with the current market, right? This is a stablecoin market cap. It's not increasing anymore. In other words, there's no more money flowing into crypto. It's now 100% player versus player. So it's unlikely that prices are simply just going to rise from here, at least not from retail, at least not from the fiat deposits into centralized exchanges. And so momentum is bearish. I like to look at the 120-day simple moving average. That's this line here in turquoise. I like to buy whenever the price is above, and I like to sell whenever the price is below. And I already mentioned how I sold some Bitcoin one day after the all-time high. I then sold the entire rest once we crossed the 120-day simple moving average. And the reason for that was this back test. So this is the performance when you trade according to the 120-day simple moving average. In white, we see the Bitcoin price. In turquoise, we see the performance. So that's not on a linear scale. Here we've got the same thing on a logarithmic scale. Sometimes we go long, sometimes we go short, right? Sometimes we make money from falling prices. And when you backtest all of the moving average durations, we find out the 120-day tended to work the best. But in general, any moving average above the 30-day tends to outperform just buying and holding. Buying and holding here is in black. And for me, the picture is relatively clear, right? I don't have a crystal ball. Again, I do not know where the price is going, but I'm simply just working based off probabilities. I don't see money flowing in. I see the current momentum historically being very bearish. The backtest suggests this. I also do not see that prices are particularly cheap, right? We are still massively above the realized price. And so this is simply what I'm doing, right? I'm not hoping for higher prices. I am out. I am now hoping for lower prices. I bet, for example, on this altcoin to continue to decline. I short this altcoin. I'm also betting on this altcoin to further decline, right? It's not that hard to find the best entry versus exit in a chart like this. The reason why those charts are doing so poorly is because the supply is expanding very rapidly. Here's that first asset. Here's the second one. I think it's a mistake trying to find this one altcoin that might still do okay in a bear market. I think it's much easier to simply just bet on this bear market, get the odds in our favor. If there's no more money flowing in, then we simply have to face reality, and it makes way more sense to bet on falling prices. I think it's better to rather have a diversified short altcoin portfolio than to buy now altcoins left and right. Again, because I don't know where the buying pressure is coming from. All those governments selling or Mt. Gox selling isn't really that big of a deal, but the long-term holders selling is, and the current momentum is, and the price being above the average cost basis, I believe, is as well. So if you want to learn how to bet on falling prices safely without losing your pants, right? This can be risky if you don't know what you're doing. If you want to learn how to do this, then feel free to check out Premium. I made a tutorial video. It's 42 minutes in length. There's actually quite a lot of tutorials here. So feel free to simply just binge watch this all. And there's of course also premium Telegram groups where we discuss various short opportunities. There's even a dedicated premium altcoin chat group where we've got individual chats for various assets. If you don't want to get burnt in a cycle, and if you actually want to make money in all of this, and if your crypto portfolio is at least $5,000 worth, then feel free to check it out. It's down below, thebitcoinstrader.com. If your portfolio is not yet $5,000, then the costs might be too high. In that case, we've also got a free Telegram channel. Feel free to check it out. The link is as well down below. Looking very much forward to chatting with you.